Welcome back, everyone. Are you all tired? Perfect. Someone told me they were looking forward to this conversation because they thought it was the most important conversation here today. And I can't agree more. I think it's actually going to be it's a very important topic. So we are not going to talk about regional integration, but the key question is regional integration the key to African solution? But before we get started, I would like to bring us into context. So Africa today has over 13 regional blocks, of which 8 of them focuses on the trade, industrialization, and resilience. But this regionalization of, or this proliferation of blocks didn't come by mistake. It actually boils down to our history. So maybe I take you down memory lane. At the time of independence in Africa, there were 2 major schools of thought, or should I say doctrines. We had the Monrovia Doctrine, which advocated for a gradual integration of economies and promoting sovereignty and the independence of nations. And then we had the Casablanca Bloc, which was very radical, which said, let's go at once and create this regional bloc and this African unity, which brought about the idea of African states. However, today we actually are not there with that dream because of the division that existed between the school of thought. So during this panel, we're going to gather insights from our panelists, which are here with me and the one online. We're going to be speaking about the unified markets in Africa. How can we use that to foster growth? We're going to be speaking about competitiveness and the long-term prosperity which Africa can actually gain from the idea of regional blocks. So for this conversation today, I have 3 amazing panelists here with me, starting with Madame Mansa Nete, who is a transformative leader, and she brings on board with her over 25 years of experience in the financial service industry. She's currently the Chief Executive of Standard Chartered Bank Ghana PLC, and the first female to hold that position in 128 years of existence. We are joined virtually by Madame Aisha Ahmad, which you can see on my screen here, who is a central banker and a board-level leader with financial expert of over 27 years, working the intersection of public policy and private markets. And she was the Deputy Governor of Financial System Stability at the Central Bank of Nigeria from 2018 to 2023. Last but not least, we have Mr. Dayo Akumazi, who is a partner and the co-head of Energy and Natural Resources, Natural Resource Practice at Templars, and which is one of Africa's largest firms with offices in Ghana and Nigeria. He brings on board over 25 years of experience as well in the commercial legal space, and he has equally practiced in both in-house legal and non-legal roles. So please help me welcome my traders. So now let's dive into business. I'm going to start with you, Madame Mansa. Regional economic communities such as ECOWAS, SADC, and the EAC have been instrumental in fostering, integration. However, there's often the overlap of memberships, leading to fragmented policies and challenges in harmonizing trade regulations. The recent rise of the Alliance of Sahel States is one of those fragments deepening this schism in Africa. So my question is, how can these regional economic communities better align with the African Continental Free Trade Agreement to create a more seamless and unified market rather than functioning as isolated blocks with different trade rules?
Thank you, and good afternoon, everyone, and it's a pleasure to be here. Look, I think let's start with, Africa Free Trade Agreement, and there's a lot of skepticism about it, and one needs to understand, the challenges that exist with this current initiative. So if you look at when it became operational, it was just before COVID. So the African countries in themselves were reeling from the effects of COVID. And obviously, we've talked about issues with infrastructure. So they were dealing with their own internal economic issues and the impact of COVID, and then could not, put in place infrastructure in a speedily way to help address issues around infrastructure. Another thing that we need to look out for, and one of the reasons why Africa Free Trade Agreement is actually delaying, is actually issues with information. People don't even know about it. If I ask, those of you in this room, how many of you really understand the protocols, the AfTA protocols? Very few people do, and there's not enough sensitization. Speaking to corporates, even in Ghana and across the continent, they will tell you that the AfTA protocols or the AfTA initiative is a game changer, right? But why is it taking so long for it to be operationalized? Now, you talk about the regional blocks, and the SADC, the EAC, etc. And let's maybe think back about how they were formed, right? You had the colonial legacy of artificial borders. And that's how each of them, you had the West Africa, Southern Africa, East Africa blocks formed. And then, you have issues on development. There's so many, how many African countries? Each country is developing at its own pace, So it's very difficult for them to harmonize policies and start to integrate. Also, you have issues with, the political instability. Look at what's happening in the Sahel and West Africa. Some countries have already exited ECOWAS. But it doesn't take away from the fact that, Africa needs to trade among itself. I mean, clearly, if you look at the statistics, it shows that if Africa Free Trade Agreement is fully operational, this will lift 30 million people out of poverty and improve the incomes of 70 million people across the continent. Fully implemented, the GDP of Africa could be $3.4 trillion. That is significant, But it has issues in terms of implementation. We shouldn't just give up, Just understand some of the blocks you talked about. The East African community has worked pretty well. 50% of exports in Kenya is to the East African, is to that block. So there's some progress made. Let us better understand the areas that we have worked and go back and try and have a plan, a proper plan, because Africa Free Trade Agreement is a very ambitious project. Basically, they wanted 90% of tariffs to be removed within 5 years. That's highly ambitious. Look at all the problems that I highlighted earlier, But if we have a systematic, process in place and work with the various blocks that are already working, I believe that would be the way to make significant progress.
Okay. Thank you for that. Just picking up on the harmonization and partnership, I'm going to get to you, Madam Aisha. Some African governments, such as Benin, Sudan, and Somalia, are actually favoring protectionist policies in their various countries, with the fear that that might cause a lot of dumping. I vividly recall back in my economics class in 2018, one of the fears of this regional integration was that people might simply import goods from China, or maybe from the Philippines, and just rebrand it and say, made in Nigeria, made in Ghana. And that doesn't really help the general economy. So coming to those kind of problems which are pushing countries to embrace protectionist policies, what do you say, what is that African balance which we need to ensure that there's the economic interests of regional blocs are actually favored? And how do we ensure mutual economic benefits? And what incentives can we put in place to encourage deeper collaboration between countries in Africa?
Thank you very much. I'm very pleased to join this conversation, and thank you for allowing me to join you virtually. I'm meant to be there physically. I think it's important to mention that we are actually at a crux of a very important tipping point when it comes to global trade and when it comes to unleashing the opportunity that Africa widely has. And that is because the background of some of the emerging global trade wars really underscore how vulnerable our continent is, because we are so externally focused. And that is why, I wouldn't miss this panel for the world, because I think regional integration is the answer to growth in Africa. I think your question actually underscores the challenges between the doctrines that we had in the beginning, because one of the biggest sort of opposing views was, how much sovereignty should we have versus how much regional federalism should we have? And I think that African countries have matured beyond the 60s. I think we have reasonably had stronger political systems, stronger legal systems, and stronger economic systems that allow us to be a little bit more ambitious in our implementation of integration. Now, how do we balance these interests? I think the interests that are, in front of these countries are around national interests, regional commitments, and I think some of those competing priorities are accentuated because the size and significance and depth of the different countries in Africa are sort of disparate. Some are big, some are small. Some would temporarily, if we do not have funding in place, if we do not have policies in place, may end up having some sort of negative effects if some of these commitments are fully implemented. So the first thing we need to do is first understand that we do need to, protect vulnerable local industry, but we still need to enable global trade. And that means having a stepwise removal of tariffs. So Mansa talked about, the 90% target. And I know that, the holy grail, so to speak, is to see ourselves get to 90% very quickly. But we need to be very nuanced as we remove those tariffs to ensure that smaller countries, weaker countries from a fiscal perspective are not overly burdened. We need to create stronger dispute resolution mechanisms. And some of these mechanisms actually don't have to be one size fits all for 54 countries. We can start in sub-regions where we look at, certain trading partners for specific sectors and start with creating fit for purpose, dispute resolution mechanisms that allow and unlock trade in that respect. And I think in terms of, incentivizing others, in terms of countries that are fully implementing, I think firstly, we need to ensure that no African countries are disenfranchised for sort of those investments. We need to offer tax breaks. We need to offer codependent and mutually reinforcing business tax breaks for those that are looking at, say, commingling, energy provision, commingling, interconnectivity, etc. We basically need to put in the incentives that allow public-private partnerships to work towards enabling the kinds of infrastructure that we need to push trade on the continent. It is very sad that today it is probably easier to import goods from China than it is across African countries. And what is, the biggest stumbling block there is the investments that are not there in the infrastructure we need, not just transport, not just like railways and all of that, but also, interconnectivity and policies. I'll talk later about how we can harmonize policies, but I think if you look at regional blocks like the EU, I think one of the biggest success stories around the EU was that harmonization of sort of policies and having that legal framework that everybody ascribes to. Thank you.
Thank you very much. So, Mr. Dayo, speaking of global wars, and coming back to the EU, the EU has usually been cited as the model by excellence to follow when it comes to regional integration, common currency, free movement of people, same policies to be followed. But however, we equally have the ASEAN groups, which is Southeast Asia, which has actually adopted a more looser and more flexible approach, focusing on cooperation without, political union. Based on these two approaches and taking into consideration the African continent and its context, what would you say is the model that Africa should adopt today?
I think it will be a mixture of both. The Asian model, they have a ethos. Unity does not equate uniformity. So while the EU is bandied as a very good model, and it is, the Asian model, I think, is more applicable to Africa, just because of what I'll call stricter disparity between the countries and the cultures, right, which have also been reinforced by colonial history. So the Asian model goes a little bit more collaboratively. The example that Aisha just mentioned now is very important because if you bring it back, something they did in the Asian model is that the countries that are more far advanced are allowed to push forward, but there are stabilization and adoption funds. The EU has a similar one as well, but we need to do it in Africa. Freudian slip. We need to do it in Africa as well, where going to a point that Madam Mensah mentioned is under the AFCA regime, right, you have to have a situation where you have more developed African countries commercially, like Egypt and Algeria, right? They could push ahead at a certain pace, but we must take care of the, with all due respect, the Lesothos and smaller economies as well. How does that work? In the Asian countries, going back to Madam Aisha's point, is they allowed a situation where you're creating a value chain. It's all about trade, isn't it? So increase the trade within, recognize the protectionism, let there be a value chain expansion across. Example, Nigeria has this raw material exported to Ghana for processing so that it can be, for processing, but exported out of, for example, Benin Republic, right? So that for one end product, there's a commonality of purpose, right? There is a spread of trade, and then that reduces the protectionism because you all have a common goal. We have this, and I'm giving a very simplistic example, but it has worked in Asia, right? And it can work in Africa. We have a common goal of doing trade across our countries, exporting a common product, but all of us are involved in the production of this end product. As opposed to going back to that example of just taking our raw material, shipping it out to Europe, China, or Asia, there's always the commonest example, right? Nigerians like to tell ourselves this, and I'm Nigerian, and I'm allowed to say this. We sometimes delude ourselves. We always tell the story how we gave Malaysia their first palm tree. Well, yeah, now Malaysia is one of the largest exporters, and we do zilch, right? So we need to learn from that, stop harping on history, and look forward and rectify the mistakes we made in the past.
Can I just give a practical example? And I think that's a very good point. A practical example is, if you look at cotton, right? You have Mali, Niger, and Burkina Faso producing cotton. But East Africa, Kenya, has textile mills, and then North Africa has the garment warehouses. So that's a practical example of how the regional value chain collaboration could work. But just to add to that, I think that also we should have an Africa model.
Absolutely.
And not compare ourselves to the EU because, clearly we have our own, challenges. Yes. I agree with your points, but we need to also look at an Africa model to ensure that this AfCFTA is operationalized.
Absolutely.
Yeah.
Absolutely.
Thank you very much for that addition. Mr. Dayo, we're going to stay with you. Let's go to the legal aspect.
Right.
Many African countries today have, different legal system, common law, civil law, customary law, etc. I'll take the case of Cameroon, for example. We practice both due to our colonial heritage. And today, I think it has been a real struggle to harmonize both in the country.
Yeah.
And added to that, we equally have many African countries which are part of many regional economic communities. So I believe that actually creates a patchwork of, of rules, complicating efforts to establishing a single coherent legal framework for intra-African trade. Considering this legal conundrum, which industries would you say have benefited from integration? Which is overcoming these legal hurdles? And what's the way forward to creating a standard legal framework for intertrade Africa?
I will go with the last one because that's the easiest one, at least for me. And it goes to your point as well. I am, this term came up at dinner yesterday. I'd never said it before. I said I'm a commercial Pan-Africanist, right? I'd never said it before. The lady said, "Oh, that's great. Where did you think of that?" I said, "I just thought of it now." We all have to reach in together to do it. So we have to do the Africa model, but I'm a lawyer, right? A lot of times we don't have to reinvent the wheel. We use a model. In Nigeria, we're based on English law, as in Ghana, right? You mentioned in the OHADA, it's based on civil law. So the short answer is this. We adopt a model law, right? Again, going back to unity is not uniformity. We adopt a model law, but recognize there are differences in different jurisdictions. A point that one of my very too smart lady co-panelists said, dispute resolution. I would slightly differ, would allow for differences in certain cases, but have a uniform dispute resolution scenario. In the Asian, there was I'll use a quick example, there was a milk dispute between Kenya and Uganda. They settled it by consensus as opposed to the EU model where you slam a uniformity or a decision. So that's the African way. So adopt, realize the difference, right? But come together and for the common good. And then your first question was the industries. Well, you know, I work at a firm called Templars. We have an office in Ghana. It was hard, but how did it start? And it's the commerciality of it, right? It's services that I think can go across. I met two people from Zambia. A Ghanaian firm has an office in Zambia, right? However, from protectionism, when my client in London said, "Why don't you have an office in Ghana?" and I went there, right? It took me 10 years for our office to open. So we need to be able to recognize that competition is good. It is easier for me holding my Nigerian passport to come to UK than to go to Tanzania. It is easier for me to, with my Nigerian passport, to go to Cuba, to go to South Korea than to go to other African countries. We need to open up ourselves, recognize that there is difference, unity, but no uniformity. And once you realize from yesterday's example that when you see the person from the next country and you realize they're not so bad, it becomes easier to do business with them. Thank you.
That's a good place.
Thank you very much. Madam Aisha, I'm seeing you smiling. Maybe we'll come to you next. Let's go to your area of expertise, banking. So today there has been the possibility of certain digital banking systems like M-Pesa in Kenya, Flutterwave in Nigeria. We have MTN Mobile Money and Orange Mobile Money as well in Ivory Coast and Cameroon, which have actually helped in expanding financial services on the continent. However, this is only the tip of the iceberg. You know, central banks still hold a pivotal role in harmonizing monetary policies and ensuring financial stability. Nonetheless, due to the different national policies that we have on the continent, it's actually inadequate to promote this regional coordination. And as such, it's difficult to form a really great financial environment. In your view, as someone who was working in the domain, what measures or reforms could central banks implement to enhance financial integrity and address the issue of currency volatility and payment system incompatibility? So just to add to that, for me to send money in Senegal, for example, is more expensive than for me to send money from the UK to Cameroon. How do we fix that issue and ensure that people have money to trade in Africa?
Thank you. I think that's an amazing question. And I think the question around financial integration is the lowest hanging fruit that we can work on. And I love the conversation about the African model because the African model will take different parts of the models that we've seen work and then implement it into something that is fit for purpose. I think one of the biggest things about the Asian model is that it has the flexibility that mimics what we have today in terms of the African Union and how we're working on it. But I think one of the positives around the EU is that strong centralized. And I think when it comes to the financial sector, that is when we can really deepen our roots. We have the perfect solution already, and that's PAPS, the Pan-Africa Payment Settlement System. And what PAPS is designed to do is to reduce our over-reliance on, say, a currency like the dollar, and see how we can facilitate trade in local currency across the continent. It's still in the works. It's made a lot of progress. I'm very glad that I was part of it when I was at the central bank, trying to put all of the compliance rules in place, trying to get agreements with central banks, to support it, and trying to get some of the biggest African banks to backstop it. I think that's one of the most powerful tools we can use to support digital trade, by making sure that we remove, at least if we can't quickly remove the physical bottlenecks, if we can't quickly fix the issues around moving people and moving goods across the continent, surely we should be able to fix the issues around moving capital across the continent and moving payments for those goods across the continent. So that's the first thing I would say. The second thing is still the elephant in the room, and it's the one we keep talking about, and that is exchange rate stability. We've been talking about a common currency in the continent for over 40 years. And unfortunately, we've not been able to get to a position where the different African countries have stable currencies that can allow us to harmonize. I think one of the things we can do in that respect is start to see how we can create, in addition to PAPS, how we can create some regional reserve funds, because we know the direction of trade today within the continent. Can we create some regional reserve funds that can help us smooth out the risk and uncertainty that can come from trading in certain currencies? We also can use financial innovation and very smart and tailored financial instruments that can help us more or less distribute that risk. So hive it off and distribute it in such a way that those that are on the receiving end of the exposure to the, say, dollar, for example, can come in at the time that they're needed, and those that need supply of local funds can come in as well. And one thing I think would also be powerful is that we've seen a lot of progress and a lot of success stories in fintech. We can't talk about Africa's growth and Africa's promise without fintech. And I think the beauty about fintech is that financial technologies, AI, and all of these amazing new digital technologies find their home in Africa, because we do have the use cases for the solution that we need. Financial inclusion, while it's growing, it's not at where it needs to be for a continent of over 1 billion people. And I think open banking, a situation where we can start leveraging our banking systems and integrating them with payment systems, and freely sharing data and information, and then using alternative technologies to give insights, can really, really be powerful to create that deep financial integration that we need. And we also finally need to deepen RTGS, particularly the regional RTGS, to make movement of funds easier and smoother, because one of the biggest challenges is not just moving funds, it's the cost of it. And when the cost is high, it's inefficient, and it really doesn't support trade.
Okay. Thank you very much for that. Now, speaking of policy recommendation, I'm going to come back to you, Madam Mansa. I'm a small business owner, but as I say in our pidgin language, suffer never finish. we see suffer back there. We are actually not very much incorporated into the whole system, but I'm not really speaking about the national level. I want to go more at the level of the African Continental Free Trade Agreement. Small size and medium sized enterprises actually constitute 80% of businesses in Africa. But they usually lack, these financial information and trade facilitation tools. If regional integration does not really actively integrate us into the whole system, we might end up being skilled by larger corporations. So, what practical steps can be taken to ensure that small and medium-sized and local businesses as well can fully participate in the regional trade and the benefit of the African Continental Free Trade Agreement?
Okay, no, interesting one. And you did say that, small and medium-sized enterprises, contribute about a significant portion to our GDP as an African continent. Standard Chartered Bank have actually developed a platform to help small and medium-sized enterprises. It's called Solve, so you can Google it, Solve. We set it up in India, and now we've introduced it in Kenya and in Ghana. And what this platform does is that it brings all the SMEs together on one platform. And you have a lot of data on that platform in terms of their sales, etc. Because we've all, bankers will typically say that, SME sector is quite a high-risk sector. Now, this platform actually de-risks it because there's enough data for banks to look at. And this platform actually is a bank-agnostic platform. So you have very number of banks on it. So it makes funding cheaper for the SMEs. And aside from that, it's a marketplace as well. So you have information on buyers and suppliers, all on this platform. And also you have information on business support services, because SMEs, one of the key areas that they require and the support that they require is business support services. So this is all in one platform. Now, there's a thought of how then can we scale it across, Africa to ensure that, SMEs, I was just speaking to the designer, the young man over there, and he was saying that he wanted to do business in Ghana. And I said, if we could have you set up on this platform, it'd be very, you can find clients, suppliers, services on a platform like this. So scaling a platform like that would help the Africa Free Trade Initiative.
Okay, thank you. We don't have... Yeah, so since we don't have much time for questions, I'm going to do something very interesting. So before we wrap up the panel, I'm going to go back to you, Mr. Dayo. So seated in this room, as you can see, there are many students doing an MBA, MPP, and you name them, who are actually considering if they should go back to the continent or if they should stay here and live the London life. So in weighing these decisions on whether to return to on the continent and considering roles in, as policy analysts, ecosystem builders, etc., what's that one advice you're going to give to all of us seated here today to do?
Okay, so I studied partly in the UK. I've worked in Zurich, Nigeria, London. Here's the thing. It's very, very difficult. I'm not here to lie to you. It's very, very difficult to move back home. But there's no headroom. You will hit a ceiling here. It's very rough, but there's no headroom back home. So for me, it's about how driven are you, right? Your qualifications here, arguably, to work for me, so I speak for myself and a few others, your qualifications here are most times, not all, most times more valuable back home, right? Lastly, I'll say if you are intent on going back home, one of my favorite sayings, a year passes regardless. If you're going to do it, do it. If you hit the 3-year mark, you're unlikely to do it. If you hit the 5-year mark, you won't do it. You'll just be that person that always wanted to move back.
Thank you for that advice. In 1 minute, Madam Aisha, what is going to be your own advice?
I like Dayo's advice. I think you can work on Africa without being in Africa.
True.
Your heart should be in the right place. I think in terms of the industries that are really emerging, I think anything to do with tech, anything to do with digitizing a process. And I would really encourage those of us that have entrepreneurial dreams, and not just to create a business. You could have an idea, because I think one of the biggest opportunities we have is, or one of the biggest, I know you said 1 minute, I'll wrap it up quickly. One of the biggest challenges, I think, is bridging innovation and policy making. And so anyone that can create ecosystems that bring collaboration together, I think would be fantastic. If you have an idea around that, I think you should execute it, and I really encourage you to do that. And executing that may not mean being physically on the continent. It may mean having to leverage your relationships outside the continent, to bring that to life. But Africa is where all the opportunity is, and I'd encourage all of us to look to Africa for the next big thing.
Thank you very much. Madam Mansa, with over 25 years of experience, what's the advice you give us?
I'll share a story of a young lady in Africa who is sitting on a global stage right now. So she came up with an idea to make organic fertilizer, or teach farmers how to make organic fertilizer to help improve their yields. It has environmental, benefits as well because it captures carbon. Now, this young lady, through her own enterprise that she started in Ghana, is now speaking on global stages with global CEOs. She won an award at COP26. She's advising ministers of agric in Russia. She's flying to the Caribbeans, advising governments, private sector on how to use this technology to improve farmers' yields. So that's an example of why you should come back to Africa.
Okay, thank you very much to our various panelists, and thank you for accepting the invitation to come here today. One last word before we close. You can only create impact where there are problems. Where there are no problems, there's nothing you can do. So Africa has lots of those problems. Make sure you come back home, and maybe you are going to make money. Thank you very much for your attention.